Well, we did just now get the release of natural gas stockpiles a few moments ago, and at the very top of this hour, we're going to get data on oil and gasoline inventories. So we're joined now by Stuart, global oil economist at Macquarie Group. Thank you so much for coming in to our new studios. How are you?
All good. How are you?
I'm all right. Are you counting down the minutes here to the release? I mean, how much attention do you actually pay to these oil inventory numbers these days?
I'm a data geek, right? That's my bread and butter. I love these numbers. It's sad, but I do.
It seems of late, though, that the inventory figures have been skewed. They haven't been on the mark.
You know what? The inventory numbers, they're kind of always on the mark. It's the market itself that goes off at times, right? And seems to want to move with the dollar much more than with these inventory data.
Now, where do we stand seasonally here? We have the height.
We are seasonally in between peak demand seasons. Summer gasoline, winter heating fuels, right? So we're in the shoulder season. We should be building crude oil stocks. We should be drawing product stocks as refiners retool and set up for winter.
And we've got oil at around $75 a barrel, but you're looking for it to be at 52 in the fourth quarter. How quickly are we going to see the sell-off to get to your target?
You know what? It's either we see this sell-off happen very, very soon, as in yesterday, or I'm wrong. Right, so the trick is, I think, very much to do with the dollar and with broader markets. We're effectively looking through the current surplus and inventories, if you will, and that market is refusing to come off.
Well, we did hear from OPEC. They raised their 2010 global demand forecast to say emerging markets are going to come out there and up their demand for oil. But everything seems to be about the U.S. dollar right now. Why is the paper trade dominating? You know what? It's
a seriously good question, and I wish I had the answer on two of those type of questions, right? You know, why is it dominating and who's doing it, right?
Right.
Aside from that, all I can do is observe that the dollar is having a major impact, right? The correlation is too close. Emerging market demand growth, OPEC upgrading its global oil demand forecast. We had done that 3 months or so ago already, and the market looks nice. Tighter in 2010 than it does now, but $75 tight?
Yeah.
Not for sure.
China itself, crude imports were 15% higher in the month of September than they were last year. Is China going to be the main driver of this demand?
It already is and will continue to be, we think, yes. Chinese oil demand growth accounts for anything north of 50% of total global oil demand growth, yes.
So when we talk about this question, potentially, the reports had been shot down by many central banks, but the potential of pricing oil away from just the dollar, using a basket of currencies, using another currency. You're laughing. I mean,
it was such a wonderful story, wasn't it?
It was a story, and it had an impact on the currency market. But how much fiction's there?
You know what? These kind of things get discussed at seriously high levels that people like myself probably don't have a lot of access to. But it's on those type of levels, top government circles, top central banker circles, not by a cabal of ex-government people in shady back rooms in places like Geneva, right? That's why we like the story so much. Now, has there been a drive toward finding another currency in which to price oil? Yeah, for the past 30 years, right? The key stakeholders will have to move. Who are the key stakeholders? They're not moving, right? Saudi Arabia and others in the Middle East. Some of our better trading partners, like China and Beijing, right? Or Beijing and China. So, no, I need to see more than a backroom clash before we start buying into stories like that.
When do fundamentals begin to matter for oil? And then when does oil start to matter to equities again? When does oil become not just as a positive sign of economic growth, but a weight on economic growth because of the price of a barrel?
In the current economic environment, you probably have to drive oil over $100 for it to begin to slow down growth, right? We saw something like that last year. Until that time, oil is mostly a boon to many different parts of the world, right? Not much of a break. When do the fundamentals again begin to matter? I like to think that they already matter, right? It's just that we're trading the 2010, 2011 fundamentals and not the 2009 fundamentals. When a different way for answering it is when the dollar stops to matter to oil. That's when the fundamentals begin to matter.
When does this stop to matter? Well, we will be counting down. We're just minutes away from the release of that latest inventory report. Our thanks for coming into the studio. Thank you so much.